So I'm Martha. We have two underwriters. They are our senior underwriters. They're going to discuss credit, and that's Robert Stevens, Carolyn Harrington. We have Ingrid Williams, who is our mortgage loan originator there. We have Chip Landquist over here, who is also our mortgage loan originator. And we have attorney Scott Syatt, who's going to talk about various aspects of buying and closing on a home mortgage. I don't know if I did it or Linda did it.
I see.
All right, so an overview of the home buying process. The first part is credit. Credit is very critical for a home buyer. And one of the best ways to look at your credit is you can obtain a free credit report. We have it in our list as well. It's annualcreditreport.com, but you get at least one free a year, but there are 3 credit reporting agencies. So in essence, you can get 3 a year free. And you can look at your credit. There is no score on it, but you can at least see, you can check your credit to make sure that it's accurate. And also you can just see what trade lines are reporting. So we always recommend that just to get that ahead of time, especially if you are going to speak with a mortgage loan originator. It does help you with that initial appointment. The other, I'm just going to touch on this very briefly because I'm going to elaborate a little more, is to obtain a pre-approval from us. A pre-approval, we have a program. It's a very good program. And we require your pay stubs. We do a full underwrite. We look at your actual pay stubs, tax returns if it's necessary. We run credits. And the only thing that we don't have is property. So we do a full underwrite. We actually do charge a fee for it, which is refundable at closing, because we want you to come back for your closing. And you have a commitment letter. It gives you a lot of clout if you go into an opening and you have a property. So you have just an open house. You have this in hand, as opposed to maybe you're competing against someone else who doesn't have an approval. So we find it's very important, and it also allows you to get a faster closing because your loan is already approved. So we have a pre-approval program. The other part that's very important is when you're looking for a house is to find a real estate agent you're comfortable with. And you can either go with a buying agent, and Chip will talk a little bit about that, and selling agents. And so that is very important to have. And at that point, you can start looking for your home once you have all of those together. Also, you might want to consider for yourself looking for a real estate attorney to assist with your purchase and sale agreement. It depends on your comfort level. If you feel that you need that, that is one aspect of it. And that person is looking out for you. And then you can close and purchase the mortgage with a lender's attorney. So when we close on a loan, we ourselves have an attorney who represents the lender, which is us. And they are basically looking out for us and protecting us. And Scott will elaborate a little bit more on that. And there's a difference between that and your own attorney in assisting you with a purchase and sale. Also, I want to just mention, we will take questions after each section, mostly the credit, because that's a long one. And then at the end, we'll take questions at the end. And during this also, we have people online have the opportunity to chat or to ask a Q&A. They can ask questions, and then we'll pause and see if they have any questions that we would like to answer. And also your questions, if you have any questions about your own personal credit, we will definitely love to talk to you after this if you would like a one-on-one here for that as well. All right, so I'm going to return it. Thank you. All right, so this is going to be Robert, and this is going to be Carolyn, and it's good.
Yeah, I don't know.
Okay.
Hi, everybody. I'm Carolyn, and
My name
this
is
is Robert.
Robert Stevens.
I'm a senior underwriter with the credit union, and we're going to discuss broadly credit. So just the importance of it, how you can fix it, how you can obtain copies of it, and what's actually involved in your credit history. So it says, unfortunately, the good life begins with good credit. So obviously, they have two different perspectives there based on their credit. Okay. So what's in your credit history? Identifying information, so it would be your name, your social security number, your date of birth. It will also include your residential and employment history, so where you've lived over the years, where you've worked over the years. Account information, so we'd be reporting on your credit cards, any personal loans or auto loans that you might have, it has that history on there. It also includes any judgments or bankruptcies, foreclosures, short sales, any adverse credit, we would see that on there. Also recent inquiries, so if you either applied for a charge cards, applied for a loan, those inquiries would all show up in the credit report as well. Okay. And then dispute instructions. Sometimes you might have something that you look on your credit, notice that, it's wrong. You might call, or actually you have to write, I believe, into the credit bureau to dispute that charge. And it would let us know that you're disputing that difference or that discrepancy. All the information comes from your creditors. So if you've opened up accounts and you're making payments, they're reporting on that, as well as public records, whatever's available that they can pull the report.
Okay, how is your credit history built? What happens is they begin the reporting process when you open up an account and start making payments. So from the day you open your first account until infinity, until they are monitoring your payment history. Each month your creditor updates the records. So our institution's the same thing. Every month they send out the information to Experian, Equifax, TransUnion, and they report that you pay your mortgage on time, your car loan on time, your credit card on time. All of the lenders do that. Sometimes they miss a month, but usually they get caught up within 2 or 3. The credit bureaus update their records and add the current month to their history on how you've paid the account. So over time, you start building a credit history, whether it's good or bad. But reports go 7 years. They report, so the information's on for 7 years unless you have a certain type of a bankruptcy, and that is 10 years for the record.
Okay, so the things that you wouldn't find in your credit history, no criminal background information, no medical information, buying habits and transaction histories. So it's pretty much like, what is it called? The smart thing that listens to everything that you do. I can't even think of the name of it right now. Oh,
I'm trying to remember too. Yeah.
Your bank account information.
It's not like Google that knows everything you do.
Yeah, that's what I was
Okay.
Any of your buying habits and transactions and any bank account information. So none of that would be listed on there, as well as your credit score.
Okay. What is a credit score? It's an automated way to analyze a history. So the bureaus have different algorithms, and what they do is they assign your credit history a score. And that score is based on a number of variables. It's how you pay your bills, whether it's on time or you're making late payments. It also scores you based on how much of your credit you're using, which if you have a credit card and you're always at the maximum amount, that score will factor that in, and that actually brings your score down. Each credit bureau, each credit bureau has their own formula to calculate the score. So they don't all have the same models. And even within the 3 bureaus, they have different models they use. So you could have 2 experience scores that might not come up as the same. You can't be exact, but it's a very strong ballpark. The scores range from 300 to 850. Generally, you see very few up in the 800s, and you see very few in the 300s. Most people's credit scores than that, the average is about maybe in the country, it's somewhere around 680, 690. Anything over 720 is considered excellent credit. Credit scores used for mortgage applications are calculated a little differently than if you apply for a car loan or a credit card. If you apply for a mortgage, we get a score from all three bureaus. So it's a lot more intensive than if you apply for an automobile or a credit card or a personal loan.
Okay, so here are the things that can impact your credit score. As Robert just kind of mentioned, your payment history. As long as you're making those payments on time, that's going to build up your credit score. If you're not paying them on time and you're over 30 days late, it's going to start having a negative effect on your credit. The amounts owed. Robert said before, if you ended up having a credit card and it's got a $10,000 limit on it and you're always right at $9,999, that's going to have a negative impact. So you want to be able to pay down those balances. The length of credit. So the longer you've had it, the more time that you're making on-time payments, that's going to be a good thing for you. Okay. The credit mix, secured and unsecured loans. So you could have some auto loans. You might have taken a personal loan against your auto loan or collateral. Those types of things. The number of inquiries. So if you're out there and you're getting every credit card for that instant savings or whatever, those can have their credit inquiries being done. If you're applying for loans or other credit cards, that can have an effect on your credit score. New credit, if you just opened, say in the past year, you've opened 4 new accounts, we might look at, gee, why is that, what's going on? Why are they taking out so much credit? That can have an effect on it too. There's not a history on that money, so we're not sure, how your payment history is going to be on that. And then your revolving debt usage percentage. We do have a credit utilization that shows up. And it's just basically how much people are using their credit cards, what kind of balances they're carrying on the cards.
Okay. Why do credit histories and scores matter to you? Well, your credit history serves as your financial reference to companies and people that you want to do business with. It is a predictor of your ability to meet your financial obligation. Carol and I are underwriters. So what we're doing is we're looking at a specific person's past to determine if they're going to pay their new mortgage or auto loan or whatever they're applying for on time. We're making a estimate on what's going to happen. So your previous history weighs very heavily on the decision we're making, in addition to income, like can you make enough money to pay the loan and other variables. Lenders use this information to determine if you meet the requirements to lend to you. So we use credit reports and credit scores to determine the likelihood that you're going to pay the loan back. Which is how we base our decision if we're going to grant somebody their mortgage loan. So your history can help you or prevent you from buying a house, which is why, when Martha introduced the program, she talked about getting pre-approved, which is a great way to determine what you can do in the future, what you're qualified to buy, what your range is going to be. Credit reports are also used for employment checks. They're not going to evaluate to the extent that we do for a mortgage, but some employers have the requirement of a certain credit history, and that could prevent you from getting certain kinds of jobs. Apartment rentals, they're looking to see if a former landlord put a judgment on your credit because you owed them rent. So that can count against you if a new landlord's looking on your credit to see if you qualified for the apartment you're trying to get. And utility companies check because they're looking to see if you have $1,000 you might owe to National Grid, and then they're going to say, okay, we'll give you a electric bill, but we're going to require a deposit because you have a history that you didn't pay your electric bill on time. So that could end up costing you more money when you want to open up a utility when you move into a new place.
Okay, so what are the permissible reasons for requesting a credit report? Fair Credit Reporting Act. Opening and managing credit accounts, making offers credit, employment purposes, business transactions initiated by the consumer, underwriting insurance, court orders, eligibility for government licenses, and disclosure to the consumer. So these are different word I'm looking for. These are different reasons why somebody would pull your credit. Okay, so that they're looking, whether you go in and you're looking to open that credit card, they're gonna do a quick little check on your credit history. Employment, as Robert said, you're going in for a job, they're gonna take your credit history. Some actually use it more so than others as well, whether or not you'd be eligible for the position. So your credit is pulled for many reasons. Maybe not to the extent of mortgage underwriting, where we pull the 3 bureaus and really look through to make sure that you have that willingness to repay.
Who maintains credit histories and provides credit scores? There's 3 major credit bureaus, which we use all 3 of them in mortgage underwriting. That's Experian, Equifax, and TransUnion. Now, applying for a auto loan, they will probably likely use, a lot of lenders will use the Experian score because they tend to be the most conservative out of the 3. But if they pull one bureau, they will pick which bureau they're going to use. But when you apply for a mortgage, it's a 3 bureau. All 3 get looked at because it's, like, as Carolyn said, it's scrutinized a lot more thoroughly when you're lending hundreds of thousands of dollars on property. So.
Okay, so how can you build and manage your credit history? First of all, you want to have a plan. You want to establish, in order to pull a credit score, to get a credit score, you want to have at least 3 open active trade lines on your credit report. That will give you a score. If you ever got stuck, you might got heavy, maybe you have 2 scores, and maybe we could look, 2 open accounts or trade lines. There's always the opportunity that maybe you can pull in an alternative credit that we can refer to. So whether that's your utilities, you can show that you've made payments for 12 months, that type of thing. You always want to pay as agreed. So make sure that, I set up all my enrollment so my automatic payments go through, so I don't have to worry about that on my account. Use caution opening and closing accounts. Remember, I said that a lot of newly established credit that shows up if you've opened up 4 or 5 accounts recently, and maybe you've used up the balances on those. You want to make sure that you're kind of careful with that because it does have that effect on your credit. Also, as far as closing accounts, maybe you have an account that you've had for years. You've always made good payments on it. That might be a good account to actually leave open on your credit because it's showing that long history of making good payments. You want to apply for the credit judiciously. So that's the other thing is too many inquiries. You don't want to have too many of them. If you really want to apply for it and need it, that might be the time to do it. But if you're just doing it maybe for those instant discounts or whatever, that might be not most opportune there. Time and performance are key. You want to demonstrate stability, that you're making those payments, that you're responsible for them, and then you want to make the credit work for you.
Okay, how can you review your credit reports? There's a few different options you have to do this. Federal regulation allows you a copy of your credit report from each bureau. So the best way to do that is to go onto www.annualcreditreport.com. The best thing to do is you can pick a bureau every 4 months and look at, they'll give you a very detailed history of your credit. They won't give you a score, but you'll be able to see how your creditors reported. So if they reported a late payment last November, and you don't think that should have been done, you have the opportunity to look into that and dispute the account. So the best way to handle the annual credit report is to pull one bureau every 4 months. So within 12-month period, you have 3. There's also a lot of online things that are available to the consumer that are for free. What I like to do personally is I go into creditkarma.com and I go into Experian.com, and you can check your credit. They update it once a month. I'm going to make the disclaimer, just because Experian model that Experian uses doesn't mean that if I go and have my credit pulled by a lender, that it's going to be the same score, but it's going to be a pretty good ballpark. And what that will do is you can check your credit once a month, what your score is. They'll change it and they'll detail to you and say, okay, this is what happened. You paid your credit card balance down. You opened up a new account. They'll tell you why your score changed, so you can see how many points you gained or lost, and they'll give you all the reasons why. That's free. You can pay for additional services, but you could do the Experian and the Credit Karma for free. Okay, and again, we talked about the annual credit report, and reports will always contain a toll-free number to contact the Bureau, and you can report and a report number that identifies you. So again, if you feel that you need to dispute something, you can do that. And also, if you were ever denied credit, you have the opportunity to get a free credit report from one of the credit providers, Experian, TransUnion, and Equifax.
Okay, so now, if you do have an error and you need to dispute it or have it corrected, you're going to contact the credit bureau directly. So you've pulled your credit, like you said, there's a contact phone number. You're going to give them a call. They do definitely want you to be specific with the item that you're looking for and that you're just disputing. You can submit it online, by telephone, or by mail. Disputes must be specific. The credit bureau will verify the information with the source. So if you're having a problem with, it would be SCU, but if you were having a problem with a different credit card company, you see dispute charges maybe that were on there, something's reporting incorrectly, putting leaks or whatever on your report, they're going to contact that company for you directly to look into it for you. Process takes about 30 to 45 days. Fix. And the source verifies, corrects, or updates the information and is responsible to provide any corrections to all credit bureaus that provide information to them. So that's the case of if they're reporting to the 3 bureaus, one bureau might have contacted them to correct it. They still have to make that company still has to make that correction across all bureaus. The consumer can add a statement of dispute if the issue is not resolved with the source. And that will show right up on your credit report. It will say that the borrower has disputed that item. So we'll look at that differently. Might ask if it's on there, we might ask what the circumstances behind that, where you are in the process of maybe getting that fixed.
So we will open up for any general questions. If it's more of a personal question, we will probably do that one-on-one better, but does anybody have any just basic questions about credit? But how to establish it, or any questions on what we covered on the?
I do.
Sure.
Now, when the 3 different credit bureaus 2 years ago, I noticed that there is a difference in the score. How much does it normally vary between one bureau and the other?
I've seen it could be 30, 40, 50 points.
Yeah, it can be very different. And typically what we'll do as underwriters, when we look at it, we try to take the middle score.
Okay.
Or we do take the middle score. So that kind of evens it out, but we do see discrepancies.
How long does your credit report last?
The history goes 7 years. Unless you have a bankruptcy, a Chapter 7, then that stays on 10 years that you had that.
I mean, so if you
Correct.
check their credit for the application, and then is there a certain amount of days that
Yeah.
goes by before you have to check it again, that could affect their loan?
Yeah, the credit reports are good for 120.
Oh, I'm sorry.
Yeah.
I apologize. I misunderstood the correct credit. We use it, we can go up to 120 days on the credit we pull. Then we have to get a new credit report after the 120 days is up. Sorry about that. Yeah, I thought you were talking about how the history.
I wasn't thinking about
Robert, do you pull a report before closing?
We do not do that. Some lenders do. It depends on who the investor is, but that gets technical. Depends on the investor, and then we have to do a refresh of the credit, but we don't have to do that. But after 120 days, then we pull a new credit report. If there's any issues, we're gonna find out.
So if you do a credit, a loan application, and if it's denied, how soon after can someone reapply?
So it was meaning denied for credit?
Yeah.
So you would want to go back, I mean, you'd want to take a look and see what the circumstances were, which we would, basically, I mean, we can tell that to you. They get a copy with their initial report anyway, so you would have that. I mean, if the credit is due to maybe too many lates that you say aren't yours, and you want to try to correct that and come back, that's fine. Other than that, I don't know.
I mean, if it was a situation where it was declined because you had recent accounts that were charged off or past due, and you've in that case, if you've settled them, you want the scores to get increased over the next 120 to 180 days, which is going to help you out. I mean, I can't tell you exactly how long it would take. It's good. Everybody's situation is different. It's going to depend on how much credit you have, how many accounts you had. You know, if you fell behind on your Kohl's charge card, you know, that's not by itself a reason we would decline a loan. But if it's the overall credit, it might take a little while to get those scores back up, because we do have a minimum score you need on a first mortgage. So we have to, if you don't meet that minimum score, then it decreases the chances that we're going to be able to do that loan. It would have to be extenuating circumstances, you know, like a health reason, or you know, that would prevented you, but you know, that hurt your history where you had a good history, then you had a bad period, but you fixed it. So it depends.
And what is your minimum score?
The minimum FICO score, the mid score has to be 620 or higher. Now, again, disclaimer that just, you may have, say, a 740, but that doesn't mean we would do the loan, because it could be for other reasons. But if your mid score is under 620, it's going to hurt you in a first mortgage.
And so the ratio of, like you said, if you are at 99% of what you owe, that's one of the key factors.
Well, that will bring your score down.
Yeah.
That doesn't mean we're not going to do the loan, but if we both had a $10,000 credit card and we had the same credit history, if I owed 9,900 and you owe 200, my score is going to be a lot lower.
Okay.
Yeah.
How do you look at it if two people are coming together to get a loan? Do you guys look at both credit histories, or do you take whoever has like the better credit history?
No, so we would look at both credit histories, and we look at the middle score or the, how to describe
The
it.
low mid score. We look at joint and we look at the low mid score.
Yeah. the
So
low
you
mid
each get,
score.
let's just say, we'll have 6 scores. If we run 3 and 3, and then we look at the middle score and we take the lower of the 2 middle scores.
Oh,
So we do worst. We always think of, with our minds, we look at worst cases in that. Yeah.
it's a lot of money to put up.
It is.
It
And
is.
yeah. If you are applying and if it's a married couple, it's a joint credit report. If you're individual, we do separate, right, individual credit reports.
Yeah.
And they are expensive now. The fees have really increased on these, and we just do it. We don't make any extra money on any of our fees. We pass them through, and yeah, they've gone very high.
What is the average fee?
Well, ours right now,
I believe that the single is 69.
69 and 131 for a
And
joint
131
report.
for a joint credit.
The fees really escalated in the last 2 years on the cost
Like $131.
$130.
for a joint, yeah.
Yeah, for a joint.
And again, we disclose that fee and that's what we charge. We don't make a dime over that. That's the cost, that's what it costs us to get the credit. That's what we charge. So we're not making a profit on that.
And one more question is about the coupon. If we came here, so we came in together and we're looking to get a house together, are we able to double up on those coupons?
It is one per loan. One shot.
One for application.
Fine.
That was a good question.
Fine. we do have
Well, you can
credit.
each buy your own house as a first-time buyer, and
Yeah.
but we're not gonna know any better. But just, don't make it obvious. All right, so, I mean, what we could do is after the seminar, we'll be available if anybody has any more
Yeah.
questions on the credit, and we'll turn it over to our mortgage loan officers who are gonna discuss the process of going to actually buy them.
So I'm just gonna ask, Linda and Scott, do we have any online, questions that are related to credit? Yeah, anything in the chat or Q&A?
Nothing at this time.
Okay, thank you. All right, so I'm gonna introduce Ingrid. Ingrid Williams is our MLO, mortgage loan originator.
Hi. Hi, so what does the lender look for? We just went over the credit history is, a huge impact on the loan approval. They're also gonna look at the type and length of your employment. They look for a 2-year history. They're gonna look at your gross monthly income, your liquid assets, your liabilities, and your debts. So the mortgage loan originator is gonna help you get through paperwork. We can read this to you or send you a list. We're gonna break it down for you and help you with your specific situations, but paperwork we need, what the underwriter is gonna look for. We've gotten to know kind of what they're gonna come back and ask for later, so we may ask for things that aren't on that list, knowing that we've seen it before and we know what their next question is gonna be throughout the process. So they are looking for a minimum 2 years consecutive employment. It says no gaps on here. However, life happens, things happen. We have families, we have other things that come up, medical issues. So in the event, it's not as though you can't get a mortgage if you have a gap in your employment and you haven't been working fully for the past 2 years. In that case, that's when I would come in and say, let you know what to prepare as far as like a letter of explanation. They just want to know why there was gaps in employment. It could have been you were in between jobs for a short period of time. Income from part-time jobs or seasonal employment, they want at least a 2-year history on that, and they're pretty strict with the 2 years for the second job employment. When you first submit your application right up front, we're going to ask you for 1 month of pay stubs. That's so that they can look at your gross income for the year. You want to make sure all your year-to-date info is on those pay stubs. They're going to ask you for 2 years, W-2s or 1099s, depending on how you're employed. Self-employment, we're going to get 2 years of your federal business and personal tax returns, and a signed year-to-date profit and loss statement. Social Security and disability income, it's going to be a copy of your award letter, 1099s. And then in some cases, we may ask you to show us that those are being deposited into an account somewhere. Child support and alimony, they're going to want a copy of the divorce decree, separation agreement, or child support award. And then they'd like to see at least 6 months of those payments going into an account. Generally, they ask for 12, I will tell you that. it's not gonna change both screens, sorry. And then another role of an MLO is to help you determine the best product for you. We offer fixed rate, adjustable rates, to go over all of those with you. PMI, which I'm not sure if any of you are familiar with that. I don't think we've gone over it yet. If you have less than 20% down, the loan can require PMI insurance. That's another additional monthly cost that has to go into the calculations. We have an awesome first-time home buyer program. We have a Smart Start program. With our Smart Start, it's done a little bit differently than other places that I'm hearing and that I personally have experienced. With our Smart Start, it's fully underwritten. So initially, you are going to pay your credit report fee. There is also what we call a Smart Start fee. The Smart Start fee goes back to you at closing. So there is that initial piece where we do collect $200 for the pre-approval letter, but it does come back to you at closing. And as was mentioned previously, we don't charge any fees for our loans. The Smart Start fee is just that piece that you'll get credited back at closing. The pre-approval letter we issue is good for 90 days. And it tells the realtors that you're working with that you are a qualified borrower. Again, it's been fully underwritten and you'll be approved for a specific amount. You'll know how much that you can borrow right off the bat. Again, we're confirming your ability to qualify for the mortgage, and it will strengthen your position against other buyers as a serious candidate to purchase the property because you have a fully committed pre-approval letter. The Smart Start program, I jumped ahead and told you about that before this one, sorry. Does anyone have any questions about the initial role of a MLO?
So where you had a liquid assets on the first screen before this, is that where you said 6 months? And you need to have like 6 to 12 months?
So
Is that like what you have in savings?
So the liquid assets would be any of your bank accounts. We're going to ask you for 2 months of bank and investment statements.
Okay.
So when you're asked for that, you're going to want to include everything, even like a 401k if you have a retirement plan, those types of funds.
Okay, but isn't there a certain amount of, like if they're looking for savings, like you can't just say, like, say you hit the lottery
That's a great thing to say. We'll keep trying.
and you just deposit $10,000 in the bank. Is it true that when they look at your bank account, they'd rather see that you built that up instead of just throwing money in an account just before you purchase?
So they're going to ask if there's a large deposit, they're going to ask you to verify where those funds came from.
Mhm.
I don't know what the
There's a,
trigger
they,
amount is. I
they like a
apologize.
60-day seasoning.
Right.
So if the money's been sitting there for 60 days, we don't know anything about
Right.
how it got
Okay.
there. But if it's less than 60 days, then we need to know where it.
And part of that reason, just because sometimes I just like to know why we ask for these things. Part of that is we want to see if it's a loan. You know, maybe it didn't show up private loan from someone. We would want to see if it is a loan that's acceptable, but we would need to see the terms so that we can add that payment in as part of your liability, part of one of your monthly expenses. So that's usually the predominant reason why we ask for that, what the source of the deposit is.
And how do you look at gifts, like gift amounts?
So if you're being gifted funds, we would get a letter, notarized a gift affidavit. And in some cases, if it's a family buying a home from a family member or from someone else, you can also do a gift of equity in some cases. Obviously, those are case by case.
Okay. And as far as the gift, they have to be a specific sort of donor. So it's typically like a family member. Who else did we look at?
A family member typically.
Yeah, it's typically a family member, like a close family member.
Okay.
It's basically them saying it's not a private loan.
Mhm.
Yeah.
Can be a friend. Usually has some form of a relation.
Okay.
Um,
Okay.
They also will use down payment assistance from different entities, like, for example, Brockton, you can apply, if you're a first home buyer, you can apply for grant from Brockton. You have to go through their classes and qualify, but you can get a closing cost grant from them, and that can be used toward them.
Okay.
So,
In the back.
I don't know if you familiar like school money, but if I have like a social money, if I want to deposit, do I have to need a gift for that or?
I can answer that.
What did she say? What's
What's about different types, there are alternate bank accounts called Susus, Parters, Juntas, it depends. Every different culture has their own method of what they call it. How that works is it's a pool of people,
Oh,
like
yeah.
20 people.
Yeah.
And everybody contributes, say, $200 a month to that pool. And then every 20th, let's say it's 100 a week. Every 20th week, one person gets the money. So as long as somebody's keeping a ledger, it's well documented, it's tracked, it can be used as money towards your down payment or.
So if I have that money, can I just deposit that? You're gonna ask me for like.
We'd have to paper trail. We would have to see all the records and, yeah, so we would have to see the ledger, how it's tracked, the terms of it. So it's involved, but yes, it's, Susus and Parters are permitted. We just have to, we're gonna ask for one.
Can you talk a little bit about income limitations for first-time home buyers?
Income limitations for first time home.
I don't know if there's a limitation.
Medium incomes and things like that for your first-time home buyer.
Oh, for the first time home
Okay.
buyer
I
program.
don't think we're gonna cover that, but
Yeah, I'm actually gonna go into that a little bit more later. But basically for the first time home buyer programs, they do, you can get an additional savings on your closing costs, which I'll go into that. If you're equal to or at, less than the median income limit in your area, in your town, it's at less than, equal to or less than 115% of the median income, which is a lot of money. I mean, you could still have a good earning and still fall well under that guideline. I brought some examples of what some of the towns' maps are. We would actually allow, instead of your $500 closing cost certificate, we would actually give you up to $1,000 for that as well. But I will go into that when I go over the first time home buyer program.
Sum it up. Your MLO is the person that will get the answers if they don't know them. They'll reach out and they'll be able to run through and decipher all of the mortgage things that you're going through and paperwork. Chip, I think.
I'm next.
so we have another underwriter, which is Chip,
Sorry.
Chip Landquist. And he's, I just read. He's not an underwriter. He's always looking to be.
No, I'm very popular.
He's our mortgage loan originator, and he's the initial person that you would contact and be the point of contact through the process. Chip.
Well, welcome, everybody. Thanks for coming this evening. Next one, if you could.
It's right in front of you. Chip.
Oh.
You wanna do it or you
I
want
thought
me to
you
do
were
it?
doing it. Whatever they need.
You want me to do it or you?
Yeah, you can do it. Yeah.
Okay.
So real estate agents, I work with a lot of them, so I can give you a lot of insight. And I'm not gonna be negative because I can. You're better off just having really good counsel than a really bad real estate agent. You're better off having good lawyer counsel. That's what I would suggest, especially with the new laws coming out this summer. There's a lot of change in the compensation, the way realtors are gonna get compensated. in my opinion, is you ought to just get really good legal counsel to draw up your contracts and go to some open houses. So but then again, I work in some markets and I've done a lot of loans. I've done over 5,000 loans in my career, so I've pretty much seen everything. So a buyer's agent, which is now coming up this summer, you're not gonna see as many buyer's agents. If an agent isn't a listing agent, they're gonna have a tough time talking you into giving them money, or the sellers giving them money. So there's a lot of changes that you should watch some things on YouTube or talk to someone who's knowledgeable. But I think the whole industry on buyer's agents versus seller's agents, it's changed, and you're better off with a good legal counsel before you buy a house, which has probably always been the case, but never till the end does that really happen. Now it has to happen up front. But a buyer's agent represents you as the buyer. You like someone's house, you want to go make an offer on it, and they'll put together a contract. But now they have to talk you into giving them the commission, or talk the sellers into putting it into the deal. In my opinion, you're better off going direct. The listing agent, you'll have a much better opportunity. But there are certain circumstances that a lot of properties, especially in the markets I'm working in, they don't even hit the market. And the agents all know each other, and they're putting stuff under agreement before it even hits the internet. That happens too. So there's good buyers agents, there's good sellers agents that represent the sellers, but you just need to figure out how you're going to structure it and what you want to pay to get things done. Me personally, if I was going to buy a house in the greater, say, half hour from here, I just go to open houses and cut a deal with a lawyer behind me that can draw the contract up. I personally would not use somebody that wanted to take 2% of a $500,000 deal, because what are they going to do for $10,000? That's my opinion. But in some cases, though, a buyer's agent they really do, in a different market, they really do work for their money, and they find you the house that you want. So it all depends on the circumstances. If you're not a skilled negotiator yourself, which of course you don't do this every day, that's why maybe having a good buyer's agent may be in your best interest, but you're going to have to pay them, or find a way that they create their own money through the transaction if you're not going to pay. And remember this, a seller's agent represents the people that are selling the house. They don't represent you. They don't represent the buyer at all, or the buyer's agent. So we realize that the seller has a listing agreement to sell the house, but it works in the best interest of the seller, not you. So you can't negotiate necessarily with the seller's agent to get the house down. So that's why you probably need good counsel. So a good realtor will evaluate the needs and preferences of you. Location. Realtors are really local. There's who has a problem finding a real estate agent? There's plenty of them. Just
I'm
a matter,
one.
right?
I'm one.
Yeah, everybody is. And you might even disagree with
I'm
me.
not here for that.
You might
purpose.
disagree with me a little bit on some of my
I'm like, what is she talking about, people? What are you talking about?
Most realtors know their location. They know the listings. I have a few that I work with that work in just select areas, and they solicit 200-300 people every year, and they don't leave that location. Then there's other ones that branch out and have multiple towns, like tri-towns. But they're going to help you with the style of your home, what you're looking for, your wants and needs. Very important when you're buying a house with a realtor. When you're using a buyer's or a seller's agent, depending on which way you're going, to either direct to the sellers or the buyers, that you don't overbuy, because they get paid commission. They're going to try to sell you the biggest house they can. And you just remember, you got to plan on, what if something goes bad? What if a job gets lost? What if you have health issues? It happens. So you just don't want to overpay or overbuy and live the dream right away, especially if you're being a first-time home buyer. Just to have a roof over your head and have appreciation. And I've owned 5 or 6 homes in my life, and I tell you, I've 4 good ones and 2 bad ones. And I know what I'm doing. It still happens even if you know what you're doing. So I would say that, to know the markets, and there's a lot of good information on YouTube regarding this, a lot of good information. Pre-approval loan amount, you want to know what the maximum loan amount that you're going to be pre-approved for. Pre-approval is better than a pre-qualification because it's an underwritten loan with our Smart Start program. You'll be able to go in and what the underwriters have already looked at your assets, your income, your DTI, the debt to income, the credit score, all that information they've vetted. So you can feel comfortable, and I should say more comfortable, if you have to make an offer without a mortgage contingency. Okay, I'm not going to get into that, but you would feel more comfortable if you had a completely underwritten loan. Role of the real estate agent is to help you find a home, making offers and negotiations. Offers are big. I mean, how much you're going to offer, what's going to be the down payment, what's going to be the closing time, things like that. So when you find that dream home that you want, you have to have someone construct the offer for you. The buyer's agent will do that, or the seller's agent will do it. But remember, they represent the seller. But that's where you're better off using a good counsel, good lawyer that you have. And remember, the credit union, if you do business with us, we have a number of very well-qualified attorneys that have decades of experience. We have a list that we only work with a small list of attorneys because we want to keep our fees down and we want to make sure that all the recordings and everything happens in a proper fashion. Okay, so we don't have an open list where you can use anybody you want to close the loan for the bank, but you can hire your outside counsel yourself if you needed to, which is fine. And I always tell people our fees are lower, so you can use some of that $1,500 you save on processing and underwriting fees to help get outside counsel. Arrange an inspection. The credit union or banks don't require you to have an inspection. They don't even need a copy of it. Once I've had one time, an underwriter asked me for a copy of the inspection. Very rarely do we see that. But it makes sense to have an inspection, but a lot of times in today's market, inspections, they're saying you're going to waive your inspection. They don't want you to do that. An inspection means that you're going to have a knowledgeable person come through the house that's licensed to be able to inspect the home for things that you should be concerned with, like termites, bad boiler systems, leaks, roofs, things like that. You're not real privy to all that home inspection information. Lead paint, we have the lead paint law. There's lead paint, it has to be disclosed. Radon, if the house has radon, has to be disclosed. In Title V, I run into some of that. Title V is if you don't have town sewer, you have a septic system, it has to have passed Title V. Okay. And I've seen different places that didn't pass, and then the sellers try to put that cost onto the buyer. But you can't legally pass title without a Title V inspection. That's why they have the law there, is people aren't going to be able to pass houses on to the next person without the septic system working. Okay. Initiate the purchase and sales contract. Then it comes to me, comes into the attorney. I don't care if you're buying a $500,000 home or a $3 million home. We got some big ones going on right now. And attorneys, what you need to do to make sure that all the contracts are right. And don't let a realtor play attorney. Some of them try to play like they're attorneys. They're not. Right, Scott?
I agree.
So they're not trained in the law. They might have some ideas and experience. I never play attorney. I says, you need to talk to the pros. I know what I do and I do it well, but I'm not going to be your lawyer. So make sure you get a good attorney, or the credit union, if you're doing business with us, has those counsels available at your right hand to help advise, and they're excellent. The initial purchase and sales contract will also come, when you first make an offer, usually they want $1,000. So that's the first $1,000 that you have on the hook for the offer. They want to see a good faith offer of $1,000. Then normally when your offer is accepted, they're going to want a 5% or sometimes even 10% down payment, which is a big chunk of money. So if you're buying a house for $500,000 or $1 million, it could be $50,000 that you have to put down. So that's why before you write that check out for 50,000, you want good counsel. So the deposits, the bank, the credit union or bank always needs copies of the deposits you put down. So please remember to take copies of the checks you deposit. And then in the contract, they're gonna come out with, when do you need to have a commitment on your mortgage? Normally, it's 30 days from when you sign the contract. We can get it done a little quicker. It's gonna get a little busier in the next 30 days, so we would like a couple, 3 weeks. Loan commitments, a commitment to lend is what you need. Not just a pre-approved, excuse me, a pre-qualification that a lot of people don't understand the difference between the two. Is that the last one?
I think that is.
Hey, that was good. That was easy. Oh, no, I have one more.
Yeah.
Yeah. Role of the real estate agent. At the end of your closing, they have what they call a walkthrough. Every time my wife sold a house, I couldn't believe how much she cleaned it. I couldn't believe it. But when she bought a house, she goes, these people are gross. She never bought a house as clean as the one she sold. That's, I tell you, that's my Italian wife, I'll tell you. And then, the closing, usually, the closing will happen in an attorney's office or a real estate office. And you'll get what they call a closing disclosure prior to closing, so you can look at all your final numbers. So thanks for having us today.
Okay, next is Scott Syatt. Scott is one of the attorney firms that we use to represent us at the loan closing. Over to Scott.
So, couple of things that were mentioned already having to do with representation. Yes, they will appoint a lawyer to handle the closing, but you also want representation. The person who's handling the closing can also represent you as a buyer. And that'll save you money. So if you are coming to me and I get the title order, what they call it, then and I'm representing you for the purchase and sale agreement, I'm not going to charge you to do the purchase and sale. So that's going to save you. But a couple of things I want to talk about that everyone touched upon. I do work for some other lenders. This is my favorite place to work with. Okay, they're the lowest fees. You're saving about $2,000 to $2,500 just when you go with them, and that's a real number. Okay, so that frees up money for adding to your offer or just having an attorney, as Chip said. I have these notes. Don't schedule your closing on a Friday. Just don't do it, because if things go wrong, you're going to be stuck for the weekend.
Yeah.
Nothing's going to happen on Monday. Realtors, they don't pay attention to holidays. Don't do it on Friday before a holiday. There's so many dates. Look at your calendar when you want to schedule your closing. Okay. So you're going to go to all these open houses, and I agree with Chip. You want to have a lawyer rather than a realtor sometimes, but on a Sunday, you're not going to be able to always get in touch with a lawyer, and you're battling against all these other people who are going to be bidding on these places, and you can't get yours in. They're going to accept something Sunday night, and you can't get it in. But if you talk to me or you talk to another lawyer, and you say, I'm going on Sunday, I want you to be on call to put this through, then we obviously could do that for you. And then once you put your offer to purchase in, then there's certain steps that go on. Once it gets accepted, then I don't really love to recommend waiving the inspection, but you are up against all these other people who are saying, well, I'll give you the same price, but I'll waive the inspection. They're going to want to go with you. But you can do an inspection and just say, I want to do an inspection for informational purposes. And then if you don't end up doing the purchase and sale agreement, if you end up backing out, you'll get your $1,000 back. So that's a tactic you could use. At least you could walk away from it. But that's the only first place that you can walk away. The only second time that you can walk away is if you don't get your mortgage commitment after you put that money in. Why do you want to have an attorney? It's a very emotional experience. You might not like the person that you're buying it from, the house. And if you're going to be speaking directly to them or directly to one of their representatives, then you're going to get heated and you might end up blowing the deal. So, you can use me as the attorney as a filter. You can yell at me and then I can make it sound nice. So let's go back to this. So the purchase and sale agreement, what usually happens is you would call me, you'd say, we got an accepted offer. I'd say, I think I agree with Chip about what's going on with this new law. However, there's sort of a lag, so nothing's happened just yet. Right now, everybody's still handling, splitting fees, the brokers, just as they have been for all these years, but it will catch up. But I would say in the next 6 months, I don't see that happening, but I could be wrong. So having a broker isn't, if you have a good broker, like Chip said, it's really good. It's like having a good attorney too, but they're not an attorney. So don't let them do a purchase and sale agreement for you. Don't let them tell you that you don't need a lawyer. There's just so many reasons that you need the layer of having an attorney in order to represent it. So what's in the purchase and sale agreement? Legal obligations of the parties, property description. If you've agreed to, and that's another thing, when you're doing your offer, if you like the drapes, you want to put it in the offer, I want these drapes, and everybody's going to agree. I want the door knocker, crazy things that people want. I want the washing machine. That's not crazy. I want certain fixtures, certain lights, certain things that, you think that they can take out. You want that in there because when I go to do the purchase and sale agreement and the seller sends me, the seller does the draft usually, and I go to do the revisions and I put something in that you told me, they'll say, well, it's not in the offer, so it's not included. And then you're in a whole new negotiation stance and you're at a disadvantage. So you want to make sure if you like something in the house that you want to be clear that it goes into the offer. Your price is going to be there, your deposit. The amount's usually $1,000 with the offer, and it can vary with respect to what you're going to put for the purchase and sale agreement. Try to get the lowest amount possible because if something goes awry, you could lose that deposit. You don't want it to be 20%, the 5%. What are your rights if the deal fails? The deal, you have an out if you don't get the loan. If there's a title issue, then the seller will have a certain amount of time to be able to correct that. And if they can't, you can get out then. Who holds the funds? It's usually going to be the listing broker, and they'll just hold it in escrow. Sometimes you can arrange it so that the attorney holds the funds. The key terms and conditions, you'll have the quote in the purchase and sale agreement, you'll have the closing date, the time and the place will usually be at the closing attorney's office. The broker fees have already been decided, but those will be in the purchase and sale agreement. Who pays when paid? Closing conditions, you have your mortgage contingency, you'll have to have that you'll have to get your loan approved by a certain date. General inspection, we talked about the septic. If there's septic, then you need title, there's going to be a Title V that's going to have to be put together by the sellers, and they're going to have to prove that it passed. Environmental inspections, radon. You can have in your purchase and sale agreement that radon has to meet a certain requirement, and usually I think it's 4.0. I don't know what the measurement is, but you could say in the purchase and sale agreement, if it's higher than the 4.0, then the seller's going to have to put a mitigation system in. You'll have final water. If there's any special issues with assessments with condominiums, you want to discuss that. We talked about if the sale doesn't close, the buyer's obligations. You can get your deposit back if you don't get the loan, and the seller has a certain amount of time to fix any possible title issues. Title insurance. There's two policies. There's a lender's policy that the lender makes you buy for them. You're paying for both of them. And then there's an optional owner's policy, which I don't think should ever be optional. Because if you go to sell your property and you have owner's title insurance, then if there's a title issue, you can send that issue to your title insurance company. They'll write a letter saying, we'll take care of it for you, and then you'll have a seamless closing. If you don't have the owner's policy, then you're gonna have to hire somebody to fix it, and that could break the deal. Okay.
what could be an example of something that you might find like down the road that you should have for owner's policy, an example of something that,
If there's a missing discharge, if there was a foreclosure issue, it's anything that led up to your transaction. So
There's lots of missing discharges out there.
there's a lot of missing discharges out there. And sometimes a bank goes out of business, and then you have these title clearing companies that can take care of it, but that takes time. And you want to have a clean policy. You want to have a clean title in order to sell, and a buyer's going to require that. And you don't want them to have a reason to back out. So if you have that owner's policy, you've done everything that you need to do. They'll have to still go. That's for the future when you sell. And you only pay one time for that owner's policy. It's a formula. And you'll have the final walkthrough before closing. There'll be the delivery of the deed and the recording of the documents. Now you don't have to go to the registry. It'll usually be what they call a mail away, where the sellers will sign everything ahead of time. They'll FedEx it to, my office. Then you'll just come in. It's just me and the buyers, and it's Waters or whatever you guys like. And then you leave in like a half an hour, maybe 45 minutes. And then I submit everything. I upload it to up in the computer, and it's done within a couple hours. So it's really much easier. And it used to be like a sweaty room with a bunch of realtors in there, and everybody wanting their money. And now that doesn't happen. It's much more relaxed.
did you want to add anything that covered? Yeah, on the slide.
Not really. I just want to, again, talk about Sharon Credit Union as far as their fees. What you're saving is, and this isn't a commercial for them. I wouldn't say this unless they were the best ones. But when I tell you their fees are so low, you go to Bank of America, you're going to pay $1,500 for an origination fee. You're going to pay $695 for a document prep fee. You might have to pay points. It's like that doesn't happen here. And they have the lowest rates. So I'm really a fan of them. I work with some other places, but I will tell you that they're at the top of the list.
I have a question about, you mentioned, if it fails, and it could be due to you don't get the loan. But what about, when you do the inspection, if the, buyer finds
You go
something
into do the
wrong,
inspect, I'm sorry,
then you can get your,
you'll get your deposit
you'll
back,
get your deposit.
but you're not gonna do the purchase and sale agreement until after the
Mhm.
inspection. So if you do the inspection and you see, there's a problem with the water heater, we want you to replace the water heater, then that's an exception to what I was saying about make sure it's in the
Okay.
offer. Because if something new comes up in the inspection, then they know you're gonna back out if they don't do
Okay.
something for you. Sure.
On owner's policy, let's say, for example, you're buying a house and it's well, the owner's policy cover you, so go through your rehab and then go to sell the house 5 years later and you find out some contractor slap the $2,000. Does it cover?
Not if you've done the rehab. If the rehab was done before you, then yes.
Sometimes I get asked. It was.
It's everything that happened up. It's everything that happened up until your purchase. So it go back 1,000 years.
So new construction, it would be strong.
Absolutely. Condos, new developments, really anything. And people think like, oh, I'm buying this from my brother. There's no problem. That's usually when something comes up. So,
Yeah.
and it's not always the brother's father, or this has been in my family for 40 years. That's when the problems arise. Because nobody checks anything because they think, oh, we don't need this, So I used to think before I did this that it was a scam because I had always heard that, but I've seen it work so many times to save deals that I think it should be required every single time. And in relation to what the purchase price is, it's really not a big amount and what you're saving later on.
And I don't know if it says, does title insurance, owner's title cover, property lines. Like if you thought you purchased it under certain expectation that you own.
No.
Boundaries, things like that. Does that cover it all?
No, but you'll get a plot plan. When you buy a house, a surveyor will go out and do a plot plan to make sure that there are no structures that are on property. And they'll most likely, if somebody's fence, for example, is on your property line, it will come up in the plot plan.
Yeah.
And you have to make arrangements to move that.
That's a good question. I'm an assessor in Randolph.
Yeah.
And I get that question a lot. Like someone will say, well, when I purchased it, they thought that their property line was here, and then they come to us and we say, well, that's something that should have been squared away before, we just detail what's on the deed.
Right. And I suppose if the description were incorrect
Mhm.
and that went over somebody's property line, then that would probably, the title company would probably.
But a lot of the deeds now don't even put like the meets and bounds and a lot of those
Right.
details in them.
Right.
But that is something that does come up when people think that they have a certain amount and then they realize that maybe they didn't.
Yeah, sometimes you can get what's called an instrument plot plan, and that's a little more involved, but that's very expensive.
Yeah.
But the standard plot plan is going to tell you if anything is approaching on your property. Any other questions?
Yeah, just to double check. So the lender policy for under the title insurance, the lender one's required. And then the owner's policy isn't, but it's highly recommended.
I'm requiring it for you. You need it, honestly.
Yeah, just to give you an idea of the cost.
Oh, yeah, and I'll tell you, when you get it together, it's cheaper. So like if you just got the lender's policy and then later on, if you wanted to buy just an owner's policy, it'd be more expensive on its own. But when you buy what they call a simultaneous policy, then that is cheaper. It's discounted.
Buy them together.
Yes, that's what's gonna happen.
I mean, we require.
I'll find out if you don't get an owner's policy,
Yeah. Some people waive it, but most people don't waive it.
Yeah. because they think it's optional.
Yeah.
And they think, oh, I heard this is, you don't need it, you need it.
Like Scott said, as long as you own the property, that's the one-time purchase, right?
It's a one-time
They're
purchase,
so
yeah.
annoying.
Lender's policy goes with the loan, so if you down the road refinance, you would have to get another lender's policy.
Yeah, and the lender's policy is only covering the loan amount. So if your house is worth $600,000 and you have a $200,000 loan, your lender's policy is only covering $200,000. And the lender only cares about getting their money back.
Any questions, Linda, from Q&A or chat? Or for you?
All right, thank you. Good luck, everybody.
Thanks. So Carolyn, briefly touched upon our first-time home buyer program. We do have a particular product that we offer as a first-time home buyer, and she's going to talk about it. Hold on.
No. Okay, so we recently rolled out, pretty recent, a new first-time home buyer product. It's a 5-5 arm. But what I'm gonna start with first is I'm gonna give you a definition of a first-time home buyer. It's an individual who has had no ownership, need my glasses, in a principal residence during the past 3 years and has not lived in a home owned by a spouse in the past 3 years. So that's our first-time definition of a first-time home buyer. The product, as I said, was a 5-5 arm. And what that means is the rate will be fixed for the first 5 years of the loan. After that, the rate can change at the 5-year mark and then 5 years after. I don't know how to really put that consecutively. So every 5 years after the initial 5 years, the rate can change. The cap, it can go up or down by 2% max, okay, on those rate changes. So what we're offering right now for the first-time home buyer is a 97% loan to value. So you're only required to put 3% down. The source of funds for that can be total gift, There are guidelines with that as far as if you, wanted to use all gift for that 3,000, that your credit score would have to be equal to or greater than 680. And your debt to income ratio would need to be less or equal to 45%. With this, we do have the $500 closing costs, which you all got the coupon for. But if you actually meet that median income requirement, so it's 115% of the median income in the area where you're purchasing the home. So just for some examples of what the median income is in some of the nearby areas, Brockton, the median income is, and this is based on who's on the application and on the deed. All right, so if it's husband and wife, boyfriend and girlfriend, it would be your combined income. Brockton, the combined income is at 115% is $126,385. So that's your gross combined earnings. The Mansfield and Taunton area, your gross income can be up to $154,790. Attleboro area, your gross income can be up to $129,260. In the Quincy and Boston area, 115% median there is $171,235. So, I mean, it's very easy to qualify that. I mean, the income limits are up there. So it's definitely a program worth doing. Now, if you end up with that falling within that median income, instead of the $500 closing costs, you're eligible for $1,000 closing costs right instead. A smart thing probably to do is probably start with that pre-approval, go into our Smart Start. You would get that $200 back as well if you find a property. I don't think if there's anything else that I need down. So there is it's a 30-year term. Today's rate for this program is at 6.25%. And if you compare that to what our current first fixed 30-year rate right now, it's 7.25%. We all know the fixed rates have been a little bit higher than they were in the previous years when people were getting pretty lucky with those low interest rates. But it definitely is a program that you should look into. Great opportunity with a 3% down. You would be required to complete a home buyer counseling course. But we have found one, and I think we have it on the next screen. Fannie Mae offers a free home buyer course that's qualified for that you can do online. And how long did you think that course
Takes
Yeah,
quite a few hours.
yeah,
I have to admit, I haven't taken it yet,
yeah.
but it is quite a few hours, and we only require it if you don't have, some people, if you don't have a credit score, if you run credit and you don't have a credit score, or and we have to rely on traditional credit. I think that's right, Robert, with that, then you would have to take the class. That would mean traditional credit would be establishing our own determination if you paid certain things on time, like a phone bill, utility bill, your rent,
Car insurance.
car insurance.
Yeah.
If that's the case, then we do require, this is our own product, we do require that home buyer counsel, that you would get a certificate. And Fannie Mae offers really good classes, so I'm assuming it's a very good class.
Yeah.
To take. There are a lot of resources for other home buyer classes where you get a certification, and they do charge maybe like $150. So but this one is accepted. It is accepted by other programs for a first-time home buyer program. Fannie Mae one we found. It does require, where it's only 3% down, this would require private mortgage insurance.
Yes.
And private mortgage insurance premiums can be a little high, private mortgage insurance, just, I don't know if people know what that covers. I can give a brief summary of what it is. It protects the lender. It's insurance for us because you don't have that much equity in the property. You're only putting 3% down. So in the event, and it's always in the negative, in the event of foreclosure, if we ever had to foreclose on that property, private mortgage insurance will give us, it's insurance that we would get back some of the funding, some of the funds, if if we didn't have through the foreclosure process, if we lost money on it through the sale, the foreclosure. So private mortgage insurance covers the lender. It's for our benefit because of the less amount of equity that there is in the product. And in the event of foreclosure, if that, between attorney's fees, past interest, anything repairing the house, if there was anything, we could be underwater with the sale of the house. Private mortgage insurance sometimes would come in and pay us back. So that's what it is. It's a requirement.
And even with the pre-approval that we were talking about, where it's a full underwrite, if your loan does require private mortgage insurance, we do send that off for a pre-approval from them as well. They get a copy of your file and they'll go through it and approve it and then let us know what the actual,
Premium.
what the premium is going to be. We do get that.
And we do find that the better credit score there is, I guess that's pretty much it. The underwriting, the debt to income, if it's a lower debt to income, that the premium is based on that as well. It's risk priced. So if you have a better credit score and maybe a lower debt to income, your premium could be less than maybe if you had a poorer credit score and a higher debt to income. So a lot of that impacts a lot of the costs. So we have found that you can have a premium could be $200 a month. It could be high or as low as $100. So this is just our program that we've offered because a lot of places have a 5% down there. You want to come up something good, you can have just only 3% and it could all be given.
Yep, which is great. All right.
Like I said, this is in the book, and the top one is that budget worksheet. It's pretty good. It talks about debt to income, and debt to income is based on if you are a W-2 employee, it's based on your gross, not your net take home. We base it on your gross amount that you earn. If you are self-employed, it's the complete opposite.
Yeah.
We base it on the net, what you're actually showing after expenses. So we base that on the net. So the budget worksheet is talking about both, and it's a good worksheet. And then Fannie Mae, that's the free education. And then the Green Path Financial has some good financial counseling. And I think we're having a seminar coming up with the Green Path Financial. So that is in there. Unfortunately, you can't click on it as a link, but if you start typing it in, it probably would come up for the other two. So. That's it. So I'm gonna wrap
I
up.
have one question.
Yeah.
Just, my question is, what would you encourage everybody to sort of assemble financially ahead of all the stock looking at this, as far as the tax return?
So for underwriting purposes, I mean, the best bet is to have like your most recent pay stubs, 2 years W-2s. Is this what you're talking about,
Yeah.
Scott? Okay. 2 years your most recent 2-year W-2s. Most recent 2-month bank statements for all of your accounts, along with your retirement accounts. Yeah, 12-month rental history. So you can basically do is either keep copies of your canceled checks when you make payments, or go to the bank and have them do a transaction for you showing that your rental income has gone through. I mean, we've even had Venmo receipts and things like that. So as long as you can prove that you've made your rental payments on time for the past 12 months, that's great. Credit, like really review your credit, take a look at it. If there's anything on there that shouldn't be there, then you want to try to get rid of that. And if there are some issues or a time frame, we always look and take your explanations for credit. I mean, things happen. I mean, can't help it, you get sick and there's nobody there to pay your bills or whatever. Things do happen on occasion, so usually an explanation for any adverse credit. And we also look for letters of explanation for recent credit inquiries, whether or not you've established any new debt that may not be reported on the credit report. That's pretty much it.
It's an easy process. You're online. You can apply online.
Mhm.
Upload documents. You would create a user account. You can upload those documents. So it's become an easy, quicker process. It's probably faster than handwriting it on the application that we gave you in the book. Any questions, Linda, for our?
I just wanted to add something on the credit. If you're in a situation that you're trying to get your credit history better, the credit union does offer a secured credit card where you can, as long as you're 18 or older, you can deposit money in the credit union, and they'll start sending a payment history to the credit bureaus. You know, as long as you follow the terms of it, and it's secured by a bank account. So that is something that you could use that'll start helping your credit scores if you need to either establish credit or improve your credit. So that's an option. You can speak to any of the branch people.
That's a good idea. Yeah. Great.
So from our online view is how heavily does student loans weigh in debt to income ratio?
What is the first?
How heavily
How
does
heavenly?
student loans weigh in debt to income ratio?
Would you like to answer that, Robert?
If the loans deferred, we use 1% of the. So if you have a $50,000 loan, even if you're only paying interest or your payments deferred, we're going to take $500 a month and apply that to your debt ratios. So we take 1% of the balance, unless you have a statement that you can show us that it's less than the 1%. But unfortunately, this does impact people who are applying for a loan, because even though the student loan is not a repayment, most likely at some point it will. And we can't assume that it's going to get forgiven or waived because we can't determine that. The 1% of the
From our online viewers as well, is homeowners insurance required on all mortgage loans?
Yes, yes, yes. Your own property insurance is required. We require you to have full replacement costs, and it has to be at least the amount of the loan.
And we also need to be listed as a mortgagee on that.
Right, you have to be listed as a mortgagee in the event that something did ever happen to the house and a claim was put in. Most likely the funds, the check would be payable to us and jointly payable. And then that's a whole process in itself. We would have to make sure whatever was damaged was repaired before we would turn over. There's a dollar amount limit before we turn over the funds or jointly endorse that check. Or if things had to be repaired, you might put that into an account and follow that, make sure that the damage is repaired. Okay. Okay, all right. Thank you very much.
Thank you.
Appreciate the time that you took. I have to say, this is our first in-live webinar in 5 years. We thought, so it might be a little. Thank you very much. I should remind me.
If you guys have questions, you want to call me, I have a comment.
Got it. Also, there, if you would take a few minutes, just can you take a few minutes to do the evaluation? We would really appreciate it for future. Thank you.
Thank you.